Welcome to the deep dive. We're jumping straight in today. Lots to cover.
Absolutely, a real mix.
Yeah, we've got insights from Blockchain DXB audio recorded just yesterday, plus developments on tariffs, Ethereum, Circle's new payment stuff.
Tokenization, that BossWorks hack update.
Exactly. And some AI and fintech news from Dubai and the UAE.
It's quite the list.
Right. So the mission really is to pull out the key stuff, maybe connect some dots you weren't expecting, and, keep it clear without drowning you in detail.
Sounds good. It's about seeing how these different pieces, crypto markets, policy, tech, how they actually influence each other.
Okay, let's dive right into the crypto market then. What's the picture?
Global market cap is kind of hovering near $3 trillion.
Yeah, $2.94 trillion, pretty close. And there's this idea that the recent upward trend might be partly because there wasn't a Fed meeting in April, no FOMC.
Ah, okay. So the anticipation for the May interest rate decision is building up instead.
Exactly. Sometimes the lack of news or just the waiting can, affect the market mood. Less immediate pressure, maybe. Makes sense. And speaking of pressure, or maybe buying pressure, Bitcoin ETFs, seeing huge inflows.
Oh, yeah. Big time. The source mentioned $442 million in just one day last week.
Wow. And that pushed total assets under management to, $108 billion?
Mm-hmm. That level of institutional money flowing in, it's definitely significant and it has to impact the price.
For sure. It kind of creates a support level, doesn't it? These aren't just quick trades.
Generally not, no. It signals more long-term belief, potentially less volatility down the road.
Now, the Fed itself, that came up too. This whole debate about whether it should even exist, abolishing the Fed.
It's a pretty radical idea, yeah. Though not entirely without historical discussion points.
Mm-hmm.
In that relationship between Powell and Trump, it's always under scrutiny.
Especially given how much the U.S. economy affects everything else globally.
Right. Any major shift in U.S. monetary policy, or even talk of it, ripples outwards. It could, paradoxically, even increase interest in things like Bitcoin as a hedge against uncertainty.
Okay, looking at the very recent data, a slight dip, 0.46% in 24 hours.
Yeah, and volume down about 21.68% to $59.35 billion. But important context.
Right, the timing, early Dubai time, which was Sunday in the West.
Exactly. So you expect things to be a bit quieter, then maybe pick up later. And of course, none of this is investment advice for you listening.
Always the disclaimer. Okay, DeFi. Decentralized finance, volume seems down a bit.
$5.26 billion,
Yeah.
About 8.87% of the total market volume. But interestingly,
What's that?
total value locked, the TVL, that's actually up. Crossed $100 billion, currently $1.6 billion locked in total.
Huh. So less trading, but more assets committed overall.
Seems like it. Alive is leading there, by the way.
Yeah.
$9.57 billion in TVL suggests maybe stronger long-term conviction in DeFi protocols, even if immediate trading volume is lower.
Interesting. And DEX dominance, decentralized exchanges.
Over 50%, sitting at 52.14%. But there's a caveat.
Which is?
How much of that is influenced by centralized exchanges?
Yeah.
That's not always a perfectly clear picture of pure peer-to-peer activity. CEXs might be contributing to those DEX aggregator volumes.
Okay. Need to look closely at the data then. What about the big CEX volumes?
Uniswap's at the top, $1.51 billion. Pancake Swap over $1 billion too. Then Radium, Meteor, Pump. Those are the main ones for 24-hour volume.
Still huge volume on the centralized side.
Oh, definitely. There's still core infrastructure for a lot of trading activity.
Gotcha. Now, stablecoins. Volume at $53.90 billion. That's like 90% of the total volume.
Yeah, 90.82%. It's high. But ideally, for a really strong bullish signal like that $100 Bitcoin target people talk about, you'd probably want to see that stablecoin volume even higher, closer to $100 billion maybe.
Why is that? More cash on the sidelines.
Pretty much. It represents capital ready to be deployed into Bitcoin or other cryptos. USDT is still leading by a wide margin, then USDC and FDUSD.
Okay. Let's look at the big two. Bitcoin market cap. Nearly $2 trillion.
$1.86 trillion. Huge. Ethereum's at $217 billion.
Volumes.
Bitcoin's 24-hour volume was $16.82 billion. Ethereum, $10.51 billion.
And dominance. Bitcoin seems up.
Yeah, 63.35% dominance for Bitcoin. Ethereum's down a bit to 7.4%.
Yeah.
And there was some mention of potential leadership changes at the Ethereum Foundation possibly being a factor there too.
Interesting. Which brings us to this whole question about Ethereum's actual, everyday use.
Right. The source really questioned the real-world utility of dApps on Ethereum for the average person.
Compared to platforms we all use daily, like LinkedIn or Instagram, where are the blockchain equivalents people are actually firing up every morning?
Exactly. It's that gap between the tech's potential and mainstream adoption. The source quoted Miko saying, Ethereum is more of a solution to a problem that does not exist.
Oof. Strong words.
It is. It definitely sparks debate, doesn't it? So you could argue DeFi and NFTs are real use cases for a growing number of people.
True. Good point. It's not black and white. And then meme tokens.
Ah, yes. Can't forget those.
Apparently, President Trump's meme coin is nearing a $3 billion market cap.
$2.96 billion, yeah. Quite something. Doge is still king, of course, then Shiba Inu, Pepe, Bonk. It's a whole category.
Wild. Okay, quick price check before we move on. Bitcoin.
Around $92,825. Down slightly in 24 hours, but up nearly 11% over the week.
Ethereum.
$595. Similar pattern. Tiny dip in 24 hours, but up over 18% in the week.
And Ripple XRP.
Tidal 5223. Actually up a bit in 24 hours, and over 8% up weekly.
Okay, so definite movement there. Let's switch gears completely now. Tariffs, Trump administration tariffs, and the economic impact.
Right. The source here was quite critical of mainstream media coverage, calling it misleading and incorrect.
Urging people to look at the White House official website for the, quote, accurate information. It's always tricky navigating these politically charged topics, isn't it?
Absolutely. Official sources give one perspective, media gives others. It's always best for you, the listener, to look at multiple sources and form your own view.
So according to that White House info, these tariffs have led to $5.2 trillion in investment committed to the U.S.
That's the number cited, yeah, with another $3 trillion pledged. Huge figures.
And the argument is this massive capital inflow will eventually be good for Bitcoin and crypto prices.
That's the connection being made. The logic is big investments, stronger U.S. economy, more appetite for risk assets, including crypto. It's a plausible theory, assuming those investment numbers are accurate and fully materialize.
The source listed some massive specific examples too. Projects Stargate, Apple Car, NVIDIA, AI stuff, TSMC chips. All in the hundreds of billions.
Johnson & Johnson, ADQ, Elaine, Roche, Novartis, a lot of big names. Even the Mac properties from Dubai, apparently praising Trump.
And Honda was mentioned, though. That was $21 million, not billion. The source clarified that.
At a different scale. But still, the overall list suggests potentially significant capital shifts, possibly incentivized by those tariff policies. Again, verifying these independently is always wise.
Definitely. The source specifically encouraged listeners to check the White House site or the company sites themselves, regardless of politics.
Which is good advice. Independent verification is key.
So the link back to crypto is, these investments strengthen the U.S. economy, which fuels more investment into things like Bitcoin ETFs, pushing prices up.
That's the chain of reasoning presented, yes. A stronger economy often correlates with increased investor confidence and capital flowing into various asset classes.
And it wasn't just tariff-related money. The UAE, Japan, Saudi Arabia. Huge separate investment commitments, too. Trillions more.
Yeah, $1.4 trillion from the UAE, $1 trillion from Japan, $600 billion from Saudi Arabia, noted as separate from that $5.2 trillion tariff figure. It paints a picture of significant global capital flowing into the U.S.
Which brings us back briefly to that idea of abolishing the Fed. The source mentioned Trump might consider it, but stress it needs Congress.
Right. Congressional approval is essential.
And the suggestion was, if that happened, it could cause an unprecedented U.S. economic boom and a Bitcoin surge.
Highly speculative scenario, of course. Abolishing the Fed would be monumental. The economic consequences, positive or negative, would be massive and unpredictable. Bitcoin's reaction would be equally uncertain.
Definitely one to file under major potential disruptions. Okay, let's pivot to Ethereum. Updates there. Sounds like some evolution at the foundation.
Yeah, following some leadership changes, insights shared by co-executive director Tomasz Stańczak. Leadership shifts in these big foundations are always watched closely.
And Vitalik Buterin's focus seems to be shifting towards privacy.
Increasingly so, yeah. He's been blogging about it, even proposed default-on transaction anonymity features.
Default-on, that sounds challenging. Especially with things like tokenization needing KYC, right?
Exactly. That's the conflict. You've got this push for more privacy built in, clashing with the practical need for identity verification in regulated areas like tokenizing real estate or securities.
How do you square that circle?
That's the million-dollar question, isn't it? Finding that balance between anonymity and regulatory compliance is a huge challenge for the industry.
The source also said Buterin's may be shifting from coordination to deeper research. zkVMs and RISC-V? Sounds technical.
Very much so. Zero-knowledge virtual machines, recursive composable proofs, cutting-edge cryptography aimed at improving scalability and privacy. Potentially huge advancements, but yeah, deep tech. Maybe a topic for another day.
Agreed. So, near term for the foundation. Layer 1 scaling, Layer 2 support, user experience, Petra for zk proofs.
Those are the stated goals, yeah.
Yeah.
But the source also noted fairly that changes in open blockchain systems, they just take time. More time than in centralized systems due to consensus and testing needs.
Right, the nature of the beast. Okay, Circle. Big news from them.
Yeah, launching a new payments and relevance network based out of New York, targeting banks, fintechs, USDC partners.
So, moving beyond just stablecoins for trading, building actual payment rails.
Seems like it. A significant move, expanding USDC's utility into mainstream payments.
And the CEO, Jeremy Allaire, is apparently aiming to compete with Visa and MasterCard.
That's the stated ambition. Leveraging stablecoin adoption and hoping for supportive U.S. regulation. It's bold, considering the incumbents.
Especially given their delayed IPO and some market uncertainty.
True. It's an ambitious play in a complex environment, competing with Visa and MasterCard's reach. That's a long game.
We should get more details soon, apparently. Want to watch.
Definitely. How stablecoins integrate into traditional finance is a major ongoing story.
Okay, next up. Tokenizing real-world assets, or RWAs, Blockscale and Vera Capital.
Teaming up, yeah. Aiming to tokenize $1 billion in U.S. real estate, starting with a $5.45 million property in Fort Lauderdale.
$1 billion! That's a serious target. Tokenizing real estate unlocks liquidity, right?
Yeah, that's the main promise. Making a traditionally illiquid asset more easily tradable and accessible to more people through fractional ownership.
So Vera Capital is launching a marketplace for this, using Blockscale's infrastructure.
Exactly, offering global investors access to tokenized commercial and multifamily properties across 7 states.
And they had a quick initial raise, $100 K plus via a launchpad.
In just an hour, yeah. Using USDC tokens on the Blockocean launchpad shows there's definitely investor appetite for this kind of fractional real estate investment.
Increased liquidity, transparency, accessibility. Those are the key benefits they're touting.
Pretty much. It could really change how people invest in property, but again, regulatory hurdles and security are key.
Good point. And that info came via ChainVio. We'll link it.
Excellent. Always good to have the source.
Now, switching to a less positive note, that BossWorks exchange hack update, July 2024, over $200 million gone.
Yeah, a really nasty one. And despite multi-factor authentication being in place, the suggestion is maybe compromised execs were involved.
That's grim. A reminder that security is never foolproof, especially against potential insider threats.
Absolutely. It highlights the persistent challenges facing exchanges.
So there's a court hearing in Singapore, May 13th.
Yes, a high court hearing to approve a restructuring and compensation plan. The hack itself has been linked to North Korean groups.
Did they manage to recover anything?
Well, the Associated Vazio exchange froze some withdrawals, but about 45% of assets were affected overall. But interestingly, 93% of the creditors have apparently backed the recovery plan.
93%? That's high. What does the plan involve?
Recovery tokens and a future decentralized exchange, it seems. It represents $196 million in claims. So a cautious optimism, maybe?
Maybe. When could users see funds or the exchange relaunch?
Could be soon after court approval, but without approval. Repayments might be delayed until 2030.
2030? Wow. That's a long wait. Tough situation for those customers.
Very tough. Highlights the long, complex road to recovery after major breaches.
Okay, let's finish with some brighter news from Dubai and the UAE. AI and fintech seem to be booming there.
Definitely. Dubai launched something called Ascend, world's first AI-powered compliance verification platform for public finance.
AI for government compliance. That sounds efficient.
That's the goal. AI-assisted system for compliance verification and recommendation, moving from manual reviews to real-time AI assessment.
What tech are they using?
Open-source language models. Retrieval Augmented Generation (RAG) allows it to analyze legal text, financial procedures, verify compliance, spot risks.
And generate reports.
Bilingual reports, yeah. Structured with recommendations. Maps KPIs to legal frameworks for transparency. And it's hosted locally on UAE cloud infrastructure for data sovereignty.
It really shows Dubai's pushing hard on public sector innovation with AI.
For sure. And the UAE overall wants to boost AI adoption in government. They even approved a new role, Legislative Intelligence Officer, using AI to manage laws.
Wow. Sheikh Hamdan bin Mohammed was quoted saying AI is becoming the infrastructure for adaptive governance and services.
That's a powerful statement. Framing AI not just as a tool, but as foundational infrastructure. A very forward-looking vision.
Definitely one to watch. And also, in the UAE, Fuse, a fintech infrastructure provider.
Based in Abu Dhabi, yeah. They just got a retail payment and card scheme license from the central bank. operating through near payment services.
So they're now a regulated payment provider. What are they building?
A digital payment platform merging tech and user experience. They're talking about AI-enabled infrastructure, virtual IBANs, aiming for faster, more secure, compliant payments.
AI for compliance and fraud detection again. Seems like a theme.
It does. Plus features like virtual IBANs to simplify business collections, merchant tools tailored for the UAE. It's a modular approach. Businesses pick what they need.
Have they got traction already?
Apparently built trust with banks across MENA and South Asia. Provided infrastructure for payment rails, digital products, even crypto integration exploration. They raised $14 million seed funding last year.
And part of Hub 71 in Abu Dhabi.
Right. Offices in Dubai and Istanbul, too. There's speculation they might partner with crypto exchanges down the line.
Which brings us back to KYC and compliance, right?
Absolutely critical if they bridge traditional finance and crypto that way. Preventing illicit transactions would be paramount.
Okay, wow. We really did cover a lot of ground. Bitcoin market moves, ETFs, those huge tariff-linked investments.
The Ethereum evolution, Circle's payment network ambitions, RWA tokenization making progress.
The tough realities of exchange security with BossWorks, and then all that innovation in AI and fintech from the UAE.
Yeah, it's fascinating seeing how these threads connect economic policy, blockchain tech, AI advancements, regulation. They're all weaving together.
It really makes you think. So here's a final thought for you listening. With all this happening, the economic shifts, the tech breakthroughs in blockchain and AI, the regulatory changes, what sort of unexpected disruptions or maybe completely new opportunities might pop up soon, especially for individuals, investors and users like us?
That's a great question to ponder. What comes next when all these forces collide?
Definitely something to chew on. Thanks for exploring all this with us today.